Pivot point standard. Let me see.
Wait, pivot point standard.
Pivot point standard is an indicator, and then when you go into the settings, it should be traditional. Are you looking at my screen?
Oh, I see it. Pivot point standard. Yeah, that's the one I had. So, what's what are they? What am I looking at? Because I just see a load of lines, like all like. I mean, like, I just don't know what I'm really looking at. I don't know. Maybe your settings are different. Mine.
Do you? Okay, so if you look at my screen, I have 3 sets of pivot points in. I click it 3 times, and then they all have different. They have one setting that is different. The thing that you change is the input, and it's the pivot's time frame. So for the first one would be daily, the second one would be weekly, and the third one would be monthly. Okay. And then I also changed the colors for each of the time frames. So the daily is, I believe, gray. The pivots for the weekly is blue, and the monthly is white. And so what they're used for support and resistance. So the pivot point standard indicator is calculated, is based off of like a formula that's used by institutions, right? And this formula pretty much is places where institutions will buy or sell, and so they're used as form of support or resistance. So if you were to look at the smaller time frame, reason why I love these pivot points indicators, let me go to like Microsoft. Now, what was in a video? So with these pivot points, they're used as support and resistance. So you can see how when price breaks this, I can't even see what letter this is. But when price breaks this line right here, we start to head towards R1. R1 is seen as a point of resistance, and you can see that price wicks it. We come back to this pivot point and we wick it again, right? So price is range bound within this pivot point within these 2 pivot points until it breaks one. Then once it breaks this one, you can see that it holds this pivot point as support before going to the next one, to this R2. Now, the different letters and number patterns, they're not necessarily important. All you just need to know is just the fact that when you see an R1, R2, P, S1, S2, that is an area where that can be support or resistance. So usually when I'm in trade, so like if I were to say, all right, we're in NVIDIA, let's say we're in the NVIDIA 275 calls, as soon as NVIDIA breaks R1, I would say, all right, guys, NVIDIA broke R1, next price target would be this R2 pivot at 277.73. And so you would be looking to trim there. If you break above this R2 pivot, then you go to the next one, which is this pivot right here at this weekly R1. If you've heard the saying, the bigger the time frame, the bigger the breakout, that's also the same with the bigger the time frame, the bigger the support or resistance. So you should see as you're approaching, like, let's say a monthly time frame, a monthly pivot, right? If you're approaching a monthly pivot, you should expect to see a bigger resistance or a bigger support. So as you're approaching it, it'll either be a big wick at that area, or when you break through, you'd expect to see a big candle that breaks through that pivot because it's of bigger magnitude. A monthly pivot would be stronger than a weekly pivot, and a weekly pivot would be stronger than a daily pivot. This blue line is a weekly, this gray line is a daily. So I would assume that we should expect a bigger area of resistance or a bigger push if we were to get to this R1 pivot in comparison to this R2 daily pivot right here. Does that make sense?
And if it broke the R1, would it tend to go through the R3 daily there that you have there?
So you see how yes. So you take it from level to level. So like now that we broke down this R2, you would assume that you would take price to this R1 pivot. Now, obviously, time frame continuity, levels, and things like that. So like if I were to use my actual chart, this one. So if I were to use this video, right? So I have all these areas of possible support and resistance, right? So let's say NVIDIA breaks below this week. So we're actually right there right now. So I would say, hey, you guys, NVIDIA just broke down of R2. The next price target is this weekly pivot. If we break below this weekly pivot, then we have R1 below that. If we break below R1, then we have this P pivot right here. If we break below this P pivot, we have this price target from a pivot that we drew before, right, from the previous wick. Then we have that price target. Then we have this gap. I already filled the gap. Gotta take that out. But that's how you go from level to level. Notice how not only do I just have my pivot point standard indicator, I also have my levels that I wrote out on the chart as well. Daily call level, price target, things like that. I think Microsoft has like, right. Everything's from level to level. As soon as you get to R, we break down R2, and you go to this gap. You go back to the reentry of the gap, 50% of the gap, weekly pivot. Then you go back to this weekly, what is this, R1. Then you break through that. Then the next price target is the daily call trigger. Break through the daily call trigger. Then you go to this monthly pivot. Break through this monthly pivot. You go to this P pivot based off the pivot point standard indicator. Does that make sense?
Yeah, no, yeah, totally. Yeah. So it's a lot of targets.
yeah, and this is why. So, and this is why I have a lot of targets, because I think I like to say like a defensive mindset. I don't really know what it's called, but I just call it defensive mindset, where you want to know all areas of where market participants exist, right? You don't want to be in a play or be in a trade where it's going up, you're in calls, and all of a sudden it's coming down, and you're like, wait, why is it coming down? And little do you know, there was a weekly pivot that you just didn't have, or institutional pivot points indicator that you just didn't have drawn out, and that's why you're starting to see a reversal or TTO. But if you had drawn it out, you could have said, oh, let me take profits at that target, right? And that's why, and you'll usually see more in a lot of cases where they will reject at these pivots or at these pivot point standard indicators.
So when did you start using them then? Because obviously the strategy is just like basic, previous wicks at the target.
OG.
Because I found like they didn't always hit them, and I'm like, why are they reversing, or why are they not getting that?
Thank you, sir. OG trades. Yeah. OG was the reason why I started using pivot point standard. Because when he first showed it to me, and I was like, oh my god, they literally hit it to a T, or they wick it to it. Like, look at Microsoft the 15, they wick this pivot point standard, wick it. You know we're not breaking through this level, then you know, all right, assume, all right, I'm going to take calls when it gets 3-2 up on the 15. So using this in conjunction with the strat actionable signal, this is a good area of support, then boom, take off, right? So yeah, he was the one who showed me, and then I just started using it ever since. I don't have a chart on that doesn't, when I'm trading intraday, I don't have a chart on that doesn't have those pivot point indicators.
Yeah, I was just gonna say, like, are they like a really strong influence for you?
Yes.
To get in or get out of things nowadays?
Get out of things, especially, or to trim and to take profits.
Trim, yeah.
Yep. Like DAL, I believe, on the 15. Yep, look at DAL on the 15. R3. Right there. And that's why I said, that's literally why I said, hey guys, trim here, because we're at R3 resistance. And if you look at my alert, that's literally why I said trim, because, and then look what happened. We're at R3 resistance, pull back. If you break through R3 resistance, then what's next? 50% of the gap. You break through 50% of the gap, what's next? The weekly pivot at 35. Break through the weekly pivot at 35, completion, or actually you got R4. And break through R4, then you have this weekly pivot at R2. Break through that, then you got the flip of the quarter, I think, or something like that. And then the end of the price target.